Look, something just happened in the silver market that has Wall Street traders doing a double take. And I'm not talking about some tiny price movement that only chart nerds care about. Silver just blasted through a resistance level it's been fighting for months, and the big money is starting to pile in. Now, here's the thing. Most people think of silver as gold's less exciting cousin. The metal that just kind of sits there while gold gets all the headlines. But right now, silver is outperforming gold, copper, and pretty much every other major commodity you can think of. And the really interesting part, this breakout is backed by fundamentals that actually make sense. We're talking about industrial demand hitting record levels, supply constraints that aren't going away, and institutional investors who've been sitting on the sidelines finally jumping in. I'm going to break down exactly what's happening, why it matters, and what you need to know whether you're an investor, a trader, or just someone trying to understand where the economy is headed. Welcome to Finance Lumina, where we cut through the noise and give you the real story behind market movements. By the end of this video, you'll understand why silver might be one of the most undervalued assets right now, and what Wall Street sees that most retail investors are still missing. Let's dive in. The breakout. Everyone missed. So here's what actually happened. Silver pushed above $32 per ounce last week, breaking through a resistance level that's held since last summer. Now, I know what you're thinking. $32 doesn't sound that impressive, right? But here's where it gets interesting. This wasn't just a random spike that'll disappear by next Tuesday. The technical indicators are showing something we haven't seen in years. The 50-day moving average just crossed above the 200-day moving average, which traders call a golden cross. And yeah, I know that sounds like astrology for finance people, but stay with me here. This pattern has preceded major silver rallies in the past, including the runs in 2010 and 2020. What makes this breakout different is the volume behind it. We're seeing institutional buying on a scale that suggests this is not just momentum traders hoping to flip it for quick gains. The Commitment of Traders report, which tracks positions held by different types of market participants, shows that managed money funds have increased their long positions by over 40% in just 3 weeks. That's massive. And it's not happening in isolation. Gold is also pushing higher, sure, but silver's moving faster. The gold to silver ratio, which tells you how many ounces of silver it takes to buy 1 ounce of gold, just dropped to its lowest level in 18 months. Historically, when this ratio compresses, it means silver is playing catch-up. And honestly, it has a lot of catching up to do. Why industrial demand changes everything. Here's what most people don't realize about silver. Unlike gold, which is mostly just sitting in vaults looking pretty, silver is actually used in stuff, real tangible products, that the modern economy depends on. We're talking solar panels, electric vehicles, electronics, medical equipment, and about 10,000 other applications. And the demand from these sectors isn't slowing down, it's accelerating. Let me give you some numbers that'll put this in perspective. Solar panel installations are projected to use over 200 million ounces of silver this year alone. That's up from about 130 million ounces just 5 years ago. And with governments around the world pushing hard on renewable energy targets, that demand is only going one direction. Electric vehicles are another huge piece of this puzzle. Each EV uses about twice as much silver as a traditional car, mostly in the electrical systems and charging infrastructure. Global EV sales are expected to hit around 20 million units this year. Do the math, and you're looking at hundreds of millions of additional ounces of silver demand that simply didn't exist a decade ago. But here's the kicker. The supply side isn't keeping pace. Primary silver mine production has been essentially flat for years, and most silver actually comes as a byproduct of mining other metals like copper, lead, and zinc. When those operations slow down or become less profitable, silver supply takes a hit. The Silver Institute estimated that we are looking at a supply deficit of over 100 million ounces this year. That means demand exceeds what mines can produce by a significant margin. And when you have structural deficits in any commodity market, prices tend to go up. It's not rocket science, it's basic economics. Wall Street's silver awakening. Now let's talk about why the institutional crowd is suddenly interested. For years, big money managers basically ignored silver. Too volatile, too small of a market, not enough liquidity. You've heard all the excuses. But something shifted recently. Major investment banks are putting out research notes with price targets that would have sounded crazy 6 months ago. Goldman Sachs recently suggested silver could hit $40 within the next year. Bank of America went even further, talking about potential moves toward $50 if industrial demand keeps accelerating. These aren't random guesses from permabull goldbugs on Twitter. These are research teams with billion-dollar reputations on the line, and they're basing these calls on fundamental analysis that's hard to argue with. The macro environment is also setting up perfectly for precious metals. Central banks around the world have been buying gold at record levels, which creates a halo effect for silver. Inflation expectations are staying elevated despite everyone's best efforts to pretend everything's fine. And geopolitical uncertainty? Let's just say it's not exactly decreasing. And when investors get nervous about currency stability, debt levels, or economic uncertainty, they traditionally move toward hard assets. Silver gives you that precious metal safe haven appeal, but with the industrial demand story on top of it, it's like getting two investment theses for the price of one. And here's something that doesn't get talked about enough. The ETF flows into silver products have turned decisively positive. After years of outflows, we're seeing consistent inflows again. The largest silver ETF added over 50 million ounces in the last quarter alone. That's physical silver that has to be purchased and vaulted, creating real demand pressure on the market. The China factor. No one's discussing. Okay, we need to talk about China, because what's happening there is absolutely critical to understanding where silver goes from here. China is the world's largest consumer of silver, accounting for roughly a quarter of global demand. And their economy, despite all the doom and gloom headlines, is still growing. More importantly, their push toward manufacturing dominance in green technologies is insatiable. China wants to control the entire supply chain for solar panels, batteries, and electric vehicles. They're not just buying silver for today's production, they're stockpiling for future capacity. And there's evidence they're doing exactly that. Chinese imports of silver jumped significantly last year, even as their domestic economy faced headwinds. That's not random. That's strategic positioning by a country that thinks long-term about resource security. But here's where it gets really interesting. China has been diversifying its reserves away from US Treasury bonds. They've been buying gold aggressively, but silver offers similar benefits at a fraction of the cost. If even a small percentage of China's reserve diversification flows into silver, we're talking about demand that could overwhelm the market. And it's not just China. India, another massive consumer, has seen silver demand surge alongside their growing middle class and expanding industrial base. The emerging market story for silver is just getting started. What the technicals are screaming. Let me break down what the charts are telling us, even if you're not a technical analysis person. Silver just broke above a multi-month consolidation pattern. In plain English, that means the price was bouncing between roughly $28 and $32 for months, building up energy like a coiled spring. When breakouts happen after these consolidation periods, they tend to run further than people expect. The next major resistance level doesn't show up until around $38. That's a potential 20% move from current levels, just to reach the next technical obstacle. And if we're talking about a real bull market scenario, $50 isn't some fantasy number. Silver hit $49 back in 2011, and the fundamental case today is arguably stronger than it was then. The relative strength index and other momentum indicators show that silver isn't overbought yet. There's room to run before we hit levels that typically signal a pullback. Now, I'm not saying it's going to be a straight line up. Markets never work that way. We'll see pullbacks, we'll see volatility, we'll see moments where everyone thinks the rally is dead. But the underlying trend is what matters. If you're finding this breakdown helpful and want to stay ahead of market moves like this, do me a favor and hit that like button. And subscribe if you haven't already, because we're going to keep tracking this story as it develops. The notification bell is your friend. Trust me on that. All right, let's keep going. The risks. Nobody wants to mention. Look, I'm not here to pump silver like it's some guaranteed money machine. Every investment has risks, and silver has some big ones. First, the volatility is real. Silver can drop 10% in a day just because a Fed official sneezed in a hawkish direction. If you can't handle that kind of price action, silver might not be for you. Second, if the global economy actually falls off a cliff, industrial demand could crater. Yes, the safe haven bid might compensate, but a severe recession would definitely impact the demand story. Third, there's always the possibility that mining companies figure out how to dramatically increase supply. New discoveries, better extraction technology, higher copper and zinc production that brings more byproduct silver. These things could change the supply equation. And let's not forget about policy risk. Governments could change regulations around precious metals ownership, impose windfall taxes on mining companies, or do any number of things that impact the market. The manipulation question also comes up a lot. Some people believe silver markets have been manipulated for years by large commercial banks. Whether you buy that theory or not, the reality is that the futures market can create price pressure that doesn't always reflect physical fundamentals. So yeah, risks exist, but the question isn't whether there are risks, it's whether the potential reward justifies those risks. And right now, the risk-reward setup looks pretty compelling. How smart money is playing this? So what are sophisticated investors actually doing with silver right now? Well, they're not just buying physical bars and burying them in the backyard. Though honestly, that's not the worst strategy if you want direct exposure. Many are using a combination of approaches. Physical silver through coins or bars gives you direct ownership without counterparty risk. Silver ETFs offer liquidity and easy trading without the hassle of storage. Silver mining stocks provide leveraged exposure. When silver goes up, these stocks tend to go up even more. But they also come with company-specific risks, like operational issues, management problems, or geopolitical challenges depending on where the mines are located. Some investors are looking at silver streaming companies, which finance mining operations, in exchange for the right to buy silver at below market prices. These can offer exposure to silver price appreciation while diversifying across multiple projects. Options. Strategies are another tool in the arsenal. Buying call options on silver futures or silver ETFs can give you leveraged upside with defined risk, but options are complex and can expire worthless, so they're not for everyone. The point is, there are multiple ways to gain exposure depending on your risk tolerance, investment timeline, and how hands-on you want to be. The institutional players are typically spreading their bets across several of these approaches, rather than going all in on one. What happens next? Here's what I'm watching going forward. First, does silver hold above $32? If it consolidates here and builds support, that's actually bullish. It means buyers are willing to step in at these levels, which sets the stage for the next leg higher. Second, industrial demand data. Solar installation numbers, EV production figures, and electronics manufacturing trends will tell us if the demand story is staying intact. Third, central bank policy. If inflation stays sticky and rate cuts come slower than expected, that could actually support silver prices by keeping real interest rates low. And fourth, geopolitical developments. Any escalation in conflicts or trade tensions tends to boost safe haven assets, and silver benefits from that dynamic. The next major test will be whether we can break through $35 convincingly. That level has been tough resistance in the past, and clearing it would open up a path toward those $40 targets the banks are talking about. Look, nobody knows exactly where this goes. Anyone who tells you they do is lying or delusional, but the setup is there. The fundamentals support higher prices, the technicals are constructive, and institutional interest is building. That's the kind of environment where meaningful moves can happen. Final thoughts. So let's recap what we've covered. Silver just broke through a key technical level that had held for months, and it's doing so with strong volume and institutional buying behind it. The industrial demand story is real and accelerating, driven by solar, EVs, and electronics that aren't going away. Supply is constrained and unlikely to keep pace with growing demand, creating a structural deficit that supports higher prices. Wall Street is waking up to silver's potential, with major banks putting out bullish research and investors adding positions. And China's role as both a consumer and potential reserve diversifier could be a game changer that most people are still overlooking. Now, does that mean you should rush out and put your life savings into silver? Absolutely not. But it does mean silver deserves your attention right now. Whether you're an investor looking for portfolio diversification, a trader hunting for momentum plays, or just someone trying to understand market dynamics, this silver story is worth following. If you want to stay updated on how this develops, make sure you're subscribed to Finance Lumina. Drop a comment below and let me know what you think about silver's prospects. Are you bullish, bearish, or just watching from the sidelines? I read every comment, and your perspective adds value to the discussion. And if you found this analysis useful, share it with someone who's trying to make sense of commodity markets right now. Thanks for watching, and I'll see you in the next one.